Right now, we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin supply growth dropped below the long-term supply growth of gold, which is 1%. The supply growth now is roughly 0.9%, and that will continue to go down with time. Scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning.
With only 1 million Bitcoin left to be mined and institutional demand rapidly increasing, the stage is set for a major breakout. That's the view of ArkInvest CEO Cathie Wood, who says the next phase of the crypto cycle is already unfolding. After months of consolidation, momentum is finally shifting, and Cathie's confidence hasn't wavered. Her fund continues to aggressively accumulate digital assets, convinced they'll drive a tech-led market rebound this year. As Bitcoin's supply tightens and capital rotates back into high-growth sectors, Cathie sees explosive upside on the horizon. She believes the coming move will be faster, more intense, and impossible to ignore. This isn't just another market rally, it's a structural shift in how digital assets are being valued and adopted at scale. Stay with us until the end of the video as Cathie Wood shares her insights on where Bitcoin is heading next, and why she believes the biggest gains are still ahead.
I'm half and half crypto, and just to give you a sense, half and half crypto and equities, hardly any bonds. So given that I think crypto is going to stun the world, at least the way I've positioned in certainly Bitcoin, the biggest. And in the case of Bitcoin, right now we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin supply growth dropped below the long-term supply growth of gold, which is 1%. With the latest halving last year, the supply growth now is roughly 0.9%, and that will continue to go down with time, which is unlike gold. If the gold price keeps going up, that supply growth will pick up in its pace. That cannot happen with Bitcoin. The second reason is institutional investment.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
Now, Bitcoin it represents three things. It's a technology, so the blockchain underlying Bitcoin, which is a layer that the internet missed out on in the early 90s because developers had no idea financial services would take place on the internet. So now that is now being put in place. It is becoming a substitute for gold in terms of a store of value. Younger people prefer Bitcoin than gold. And I think they do believe that it is basically the same thing. Both of their prices are determined by scarcity value. And it is a new asset class. It does not behave like other asset classes. Sometimes it behaves like the NASDAQ. Sometimes it doesn't. Sometimes during the regional bank crisis in the U.S. in early 23, it boomed because everybody understood no counterparty risk here like the banks had back then. So it doesn't behave like any other asset. And that means that institutions and asset allocators have a duty to assess whether it deserves a role in the portfolios or their asset allocation. And if they say no, they better have some very good reasons. So the $100 billion that I mentioned, institutions have to either take up those newly minted Bitcoin, and that's going to happen over years and years, or they'll have to pay up to get holders to sell it. So again, scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning. If you look at Bitcoin over time, the volatility was incredible in the early days, 200, 300%. It has been coming down consistently, 40, 50% now. And if you believe in the scarcity value of Bitcoin, just like gold has had ups and downs. You're going to be willing to put up with the volatility. But it's the sort of asset where you put it in your portfolios and then just leave it there. I mean, there's going to be trading around it, and that's great for the exchanges. You know, we're involved with Coinbase. That's great for exchanges. But for individuals and institutions, it's a buy and hold asset because it is in such early stages. And really think about that. Institutions probably have trillions commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted.
Cathie Wood highlights three major forces propelling Bitcoin's rise. First, it's becoming the go-to store of value for younger investors. While both gold and Bitcoin are scarce, Bitcoin's fixed supply and programmed halving make it even more limited over time. With just 1 million coins left to be mined and annual supply growth now lower than gold's, Bitcoin's scarcity is starting to carry serious weight in the market. Second, institutional demand is accelerating. Bitcoin is being recognized not only as a store of value but also as a tech innovation and a unique asset class. Unlike traditional stocks or bonds, it behaves independently, something that stood out during moments of financial stress like the 2023 banking crisis. This durability is prompting portfolio managers to rethink its role in diversified investment. Third, the gap between supply and demand is widening. With only around $100 billion worth of Bitcoin supply left to enter the market, institutions will either accumulate slowly or drive prices higher by competing for limited coins. According to Cathie, this scarcity meets capital scenario signals that Bitcoin's long-term rally is still in its early stages, with significant upside yet to come.
Personally, I have bought Bitcoin outright. Many of our clients wouldn't let us put it in the portfolios, so others are playing it through Coinbase. Robinhood is developing a crypto strategy as well. SoFi is developing a crypto strategy. eToro here in Europe just went public, and we added it to our portfolios. It has a crypto strategy. So many are forced to go in directly just because their platforms. I'm thinking about advisors now. I realize you're DTC, so your clients can buy it outright. The last thing that I'd like to add is there is a way to kind of straddle the two, and that, of course, is ETFs. So spot Bitcoin ETFs were approved. The SEC approved them last year. ARKB was one of them. That's ours. And so that is sort of a way to leg into pure play Bitcoin exposure instead of dealing with a wallet provider. Through the lens of innovation, I have never been more bullish. And one of the reasons for that is, if you look at the financial markets really over the last 4 to 5 years, and the equity market in particular has performed in a very narrow way. Very few stocks delivered the bulk of the performance. In fact, if you look at the Mag 6 over the last 5 years, they're up 5-fold, while truly disruptive innovation, not saying that they do not innovate, but truly disruptive innovation is up only 30% if we look at that segment of the market. We think those places are going to switch going forward. So very, very bullish. Well, there are 3 of them there: robotics, energy storage, and AI. 3 major innovation platforms. Each one has its own S-curve, and now they're intersecting. One is feeding the other in the form of autonomous taxi platforms. We think that's an $8 to $10 trillion opportunity globally in the next 5 to 10 years. Mm-hmm. So exponential growth all the way. We have in our Big Ideas 2025 forecasts for both of those, as you say. So which one do we believe will get there first? I have to say Tesla, hesitantly though, because the distance between here, say $330 and $2,600, is less than the distance between 104,000 and 1.5 million. But our confidence in both is very high. Just want to emphasize that. This is a bit of a deja vu moment in my own career. This period reminds me of the early days of Reaganomics in the early 80s. And Reagan was cutting taxes, deregulating, and focusing on getting interest rates down. Trump is getting tax rates down in more ways than Reagan did, in that he's trying to get tariffs down. So if you look at the 80s and 90s, those were the golden age for equities. I think we could be entering into another period like that. Our strategy is volatile, more volatile than the market. And that's because these are long duration strategies. So they do get hit harder during turmoil. But the ironic thing is, when consumers and businesses are afraid or concerned, worried about the future, they are more willing to change the way they're doing things. So better, cheaper, faster, more productive, more efficient, more creative products and services. That's what we do. So what you usually see towards the end of a correction or a bear market is our stocks tend to start outperforming before the broader market does. And that has happened this time as well. We went through tariff turmoil. We went down more than the market, and now we're up more than the market. And the question now is, will this be sustained? If we're right that we're moving from a rolling recession to a strong recovery with surprisingly low inflation because it's going to be productivity driven, I think we're in for very good days.
Cathie Wood believes a surge of capital is flowing into crypto, with institutional investors playing a key role in driving prices upward. She anticipates significant gains over the next 3 months and sees this momentum as a strong signal that Bitcoin is here to stay, not just as an asset, but also as a hedge against currency devaluation. With crypto legislation gaining traction in the U.S. House of Representatives and global interest ramping up, Wood is encouraging her portfolio companies to double down while the growth window remains wide open. She estimates that ARK's tech-focused investment strategy is targeting a $7.8 trillion opportunity, still under 10% of the global equities market. as more emerging markets embrace digital currencies, which sees decentralized finance as poised to replace much of the traditional financial system. Do you agree with her outlook? Share your thoughts in the comments below. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.